All right. So welcome back to Revealing Real Estate. We have another wonderful guest that's going to be that's on the show right now, all the way from North Carolina. We have a gentleman by the name of Jay Connor. Jay has been buying and selling houses since 2003 in a population of about 40,000 people, with profits now averaging around $78,000 per deal, which is not bad at all. He has rehabbed over 475 houses and been involved in over $118 million in transactions. Jay has completely automated his annual seven-figure income business to where he works in his buying and selling house business less than 10 hours per week. His passion is motivating and teaching other real estate investors how to raise private money without ever asking for money. As a result, Jay has consulted one-on-one with over 2,000 real estate investors. When he lost his lines of credits on the bank in 2009, Jay raised $2.1 million in less than 90 days in private money when cut off from the banks, which is pretty good from my opinion, because I figure one of those processes for me is definitely the hardest part is finding the right money. Jay is also a commercial developer of shopping centers and condominium communities. He is a national speaker on the topics of private money, foreclosures, the side of COVID, automation of your business, and personal development. In addition, Jay is a two-time national best-selling author and past president and Business Networking International. So I'd like to welcome to the show Jay Connor. Jay, thank you for coming on. We have so much to talk about. Want to just kind of let you take the wheel a little bit here and just talk a little bit about yourself and how you came about to be where you are today.
Sure, Nick. Well, first of all, thank you for having me here on the show to talk about what I am most passionate about, and that is the topic of private money. So, why am I so passionate about it? Well, I can tell you, private money and using private money has been the biggest game changer for our business of buying and selling real estate all the way since 2003. So, what happened, Nick, was the first 6 years that my wife, Carol Joy, and I were investing in real estate here in Eastern North Carolina. The first 6 years from 2003 until 2009, we relied on the local banks to fund our deals. That's all I knew to do. I didn't know anything about private money. I didn't know anything about self-directed IRAs. All I knew to do was the traditional way of borrowing money for real estate. Well, what's that? Well, that's when you go to the local bank or you go to the hard money lender and you get on your hands and knees and you put your hands underneath your chin and you say, please fund my deal, right? Beg, sell, persuade, talk,
Yeah,
all that.
they
That's
want to
all
know
I knew to
everything.
do.
They want to know about your kids too as well, Jay.
Exactly.
Yeah,
And so that's all I knew to do. Well, it was January 2009, Nick. I was sitting here at my desk in my office, and believe it or not, here in North Carolina, we actually still have these things called handsets with cords attached to them. It's called a telephone handset. Anyway, I
yeah.
picked up the phone, Nick, here at my desk, and I called my banker. January 2009, I had two houses under contract to buy. And I learned very, very quickly that my line of credit had been shut down with no notice. And I asked my banker, I said, why are you shutting my line of credit down? He said, Jay, don't you know there's a global financial crisis going on right now? I said, no, but now I got a financial crisis going on because you're not funding my deals. So I hung up the phone and I sat here at the desk for a moment and I asked myself a question. So here's a writer downer whenever you got a problem and you just don't know what to do about it. By the way, these people walking around saying every problem's an opportunity, I wanted to throw up. I didn't have no opportunity, I had a problem.
Yep.
So I sat here and I asked myself the question, Nick, who do I know that can help me with my problem? I immediately thought of Jeff Blankenship, who lived in Greensboro, North Carolina at the time. We were really, really good friends, still are. He was investing in real estate. And I called him up. I said, Jeff, and I told him what happened. He says, well, welcome to the club. And I said, what club? He said, the club of losing your line of credit. He said, the bank cut him off the week before. I said, well, how are you funding your real estate deals? And he said, well, have you heard of private money and private lending? I said, no. He said, have you heard of self-directed IRAs? And I said, no. So I studied those. I studied private money and self-directed IRAs. And so what did I do without asking? And here's what's interesting, Nick. Since January 2009, I have not asked anybody for money. I haven't pitched a deal. And people say all the time, well, Jay, How you got $8.5 million in private money that you just moved from projects to projects to projects without asking anybody for money? And here's
Right.
the answer. And here's how I started doing it. Here's how I still do it today. What I did is I put on my teacher hat, my private
Nice.
money teacher hat,
Yeah.
and I started teaching people that I already had an association with my private lending program that I put together. So what I did is I put together a program that I started teaching people of how they can earn high rates of return safely and securely by either using their investment capital or their retirement funds and or their retirement funds. So I taught them what my interest rate would be, how it's all backed by real estate, the length of the notes, how they can get their money back in 90 days if they have an emergency, etc. Takes about 20 minutes to teach my program that I put together to potential private lenders. And I did that. And listen, Nick, without asking for money, just simply teaching, right? I attracted $2,150,000 in 90 days. And I don't say that to brag. I just say it's a lot easier to teach people the opportunity of private money versus chasing and begging. You know, desperation has got a smell to it. And the worst time to be raising money for your real estate deals is when you've got a deal that you need funded. So we separate the conversations of teaching the opportunity of private lending and private money to individuals and then having a deal for them to fund, which is not a pitch. I just give them the good news phone call and tell them I can now put their money to work. And they're sitting by the phone waiting for the call, Nick. Here's the deal. If especially if they have moved current retirement funds that they have over to a self-directed IRA company, they are not making any money until they invest those funds. So I'm ethically bound to give them the good news phone call and tell them that I can put their money to work. So again, you can't be rejected. There's no fear of rejection when you're not asking anybody for anything. You are offering a mortgage instead of asking for one.
That's great. Some great insight. So Jay, when you start raising this money, it's I guess we'll call it more of a syndication or a syndication company that you have, where you're raising this capital and then reinvesting it. Where are you reinvesting those funds?
So I'm not raising money for a fund and I'm not syndicating. Everything that we do in this
I
world of
see. Okay.
houses is one offs. Everything is what we have a one off. So you got a private lender or maybe two private lenders that are loaning money on a particular property. So each lender is getting their own promissory note, they're getting their own mortgage or deed of trust here in North Carolina.
Right.
And so they're not investing in a fund, they are loaning money out that's backed by that piece of real estate. So when we sell that real estate, we'll pay off the private lender and then reinvest their funds in the next project or the next property.
Makes total sense. So what type of deals are you buying out there?
Single family houses primarily.
Sorry,
Single family houses.
single
Single
family
family
houses. Now,
houses.
do they have some rental potential, or are they more like a fix and flip type of opportunity where you're going in, revamping them and then putting them back on the market?
Yeah, right. I let the market dictate what we do. So in the past, I have bought with private money and sold a lot of homes on rent to own or lease purchase. And we'd actually help the buyers who didn't have the credit score. We'd help them get ready for a mortgage. But in this market that we are in today, we are flipping, buying them, rehabbing them, turning them into beautiful homes, and then turning around and reselling them. And the reason we're doing that is because demand is so high, inventory is so low in the multiple listing service. It's for that reason most of our deals we find are what we call off market. They're not in the multiple listing service. We're buying directly from for sale by owners that their properties really are not in condition really to be put in the multiple listing service. So we buy from individuals, make them beautiful, and then list them with our realtor in the multiple listing service. And of course, in this hot market, we have multiple offers and we're under contract right away.
Yeah, that's some really good insight. We do a lot of I do a lot of wholesaling right now in Canada. And what we do is we try to find a lot of these off market deals ourselves. And there is a very big market for it. To people would be surprised to really understand how big of a market is that people either the house is under a lot of distress, or the owner is under financial distress. Maybe it's a divorce situation where they just want a quick sale and want out of that property. A lot of times these sellers are looking to sell below market value. But to fund a lot of these deals, it does take a lot of private money, because A lenders, or B lenders as we call it here in Canada, don't like to fund those type of deals because they're not on the MLS system. So looking for private money is very essential and very critical. Jay, if I wanted to start building and raising private money, how do I start the process? How do I get to the very, because I'm new at this. A lot of the lending that I get for myself financially is from the A lender banks, right? From the big banks. How do I start building up and start raising private money for myself?
Sure. Well, I'm glad you asked that question. First of all, let me start answering the question like this, and that is we need to know where these private lenders are. What categories do these people fall in? And again, we're talking about doing business with individuals, human beings. We're not
Yep.
borrowing any kind of institutional money. I'm not talking about hard money lenders or B lenders, as you call them in Canada. So where are these people and who are they? Well, there's three primary categories of where private lenders are and who they are, should I say. Number one is what I call they are in your warm market. They are people that you already know, you've already got some kind of association with. They're in your cell phone, they're on your email list, you're connected with them by social media. You go to church with them, you play golf, you play poker.
Mm.
You go to all, ever how your people, right? So that's one
Yep.
category, people you've already got an association with. Okay. The second category of who private lenders are and where they are is what I call your expanded market. So we all know there's a direct correlation between your net work and your net worth, of course. So, how strong is your network? Well, I always say, regardless of how good or bad it is, there you can always expand it. So, I teach people, other real estate investors, how you can grow your connections and grow your network very, very quickly. In fact, Nick, when we get to the end of the show here or along the way, I'd love to give away my book that I'm so excited about called Where to Get the Money Now. That I have a process in the book that teaches how to grow your network. The third category of who private lenders are or where they are, that's existing private lenders. Existing private lenders. Well, where do you find existing private lenders? Well, I can tell you where you find them here in the United States. I'll let you speak to how it relates to in Canada, Nick.
Yep.
But here in the United States, existing private lenders, a lot of them have got their retirement funds moved over to what I referred to earlier in the show, and that's self-directed IRAs. You've got a different name for them in
We call them
Canada.
RSPs.
RSPs, same thing. Essentially. And so people have retirement funds that they've moved over to an RSP, self-directed IRA.
Yeah.
And here's what's interesting, at least in the United States, 70% or more, at least 70% of all those account holders that have those retirement funds, they want to invest in real estate, but they want to do it passively. They want to loan money. They want to loan their retirement funds
Yeah.
out to real estate investors and just be totally passive and get, a nice rate of return. Well, how do you find those people? So I'll sort of back into it and then I'll get to the warm market in a second.
Yeah.
How do you find these existing private lenders that have retirement funds? Well, I can tell you what happens here in the United States. There's one particular self-directed IRA company in the States. The name of it is questtrust.com out of Houston, Texas. That's where all my private lenders that have their retirement funds are loaning me money from. Well, they have virtual on Zoom monthly networking events to where individuals that are looking to borrow money and individuals that are account holders are wanting to lend money come together and network with each other. They'll put you, in rooms for you to network. They also have in-person networking events. So check out, the self-directed IRA companies and the RSPs there in Canada, and see if they have networking events. Now, when I started out raising private money, I found another way to find them is I hired my real estate attorney's paralegal to search public records here in our local county courthouse,
Hmm.
looking for individuals' names that had loaned money out secured by real estate. Well, we only found two in 90 days. I said, there's got to be a quicker way. So we actually started developing our own private lender data feed. So every month, our software goes out, gets every private lender closing in the nation of the United States, and we have their contact information, the interest rate that they're accustomed to getting. That all comes from public record. Now let's go back to your question, Nick. How do you start? Well, we've identified where they are. I did give a tip there on networking with self-directed IRA account holders. But let's come back to your warm market. I'm going to share with you right now. Now, in my book, I really dive deep into this process, but let me give the 30,000 foot view as to how this works. There's 5 steps to going from no private money to having a lot of private money very, very quickly without ever asking anybody for money. The 5 steps are what I call the 5 steps of your warm market. So, what do you do with these people that you've already got in your cell phone or social media? Step number 1 is simply make your list. So I have a process that you can go through. It's in my book. I have a process you can go through to help you identify your top 40 potential private lenders that you already know. So there's step number 1. You got your list. Doesn't take long to put the list together. I can tell you how to start out your list. Start out with people that you've got contact information on that are retired. If they're
Yeah.
retired, there's a pretty good chance they got retirement funds,
Yeah.
right?
Yeah.
So make your list. Step number 1. Step number 2, we're going to have a short, casual conversation. You are going to have a short, casual conversation with the people on your list. Now, we have 2 different scripts that we use. One is what we call the direct method, the other is called the indirect method. Well, the direct method employs what we call the magic question. And here's the magic question. You ask the potential private lender, do you have investment capital or retirement funds not giving you a high rate of return safely and securely? That's the magic question. Now, we also have the indirect method. Now, obviously, you're not going to start out a conversation with that direct question.
Correct.
You're going to
Yeah.
be in conversation with someone, and you have a by the way question, and then
Of
you ask
course.
that
Yeah.
direct
You let them
question.
know what you do, why you're doing it, so forth. Yeah.
Exactly.
You build a rapport.
Exactly. And so then we have the indirect method. Now, this is in step number 2. The indirect method employs the phrase, I need your help. So here's the way this works. In fact, it's exactly what I did way back in 2009 when I lost my line of credit. I went to Bible study at church on a Wednesday night. I walked into the foyer. I walked up to a gentleman that I had known for years, and I told him I'd like to visit with him for a few minutes after Bible study. We got together, and I looked at him, and here's exactly what I said. I said, Wayne, you know everybody in this town. And he did. He was very well connected. I said, and I need your help. And I followed up that statement by saying, I have now opened up my real estate investing business by referral only to people that I know and trust. And when you run across somebody that is complaining about the volatility of the stock market or the low interest rates that they're getting at the local bank, would you refer them to me? Because I've now put a program together where I'm paying insane high rates of return to my investors. Well, what do you think he said to me? He looked at me and he said, well, what have you got in mind? So now he's interested, right?
Yeah.
I didn't ask him for money.
Yeah.
I asked him to help me spread the word, right?
Yeah.
And so I went to I went to his home and his wife's home the following day. They became my first $250,000 private lender by me simply telling him, I need your help. So that's step number 2. Step number 3 is I've got a 16-minute audio that I've recorded thousands of times for the members of my Private Money Academy. And what that does is it introduces this world of private money without having to go around and chase a bunch of people. And so my members just send that audio out to their email list, and that automatically brings their contacts back to them in step number 4. And step number 4 is what we call teaching the program. It's the one-on-one visit, either on Zoom or in person. And that's where you take my private lending program, the interest rate you pay, the length of the note, et cetera, and you put on your teacher hat again, and you
Yeah.
teach people in your network, right?
Yeah.
What private money is and how they can get high rates of return safely and securely. I got a PowerPoint that my members use. And then step number 5 is they simply give you a verbal pledge as to how much money they've got to work with. If they've got retirement funds, you then introduce them to the self-directed IRA company where they can move their funds over. And then, of course, you go find a deal just as soon as possible for them to fund. So that's the quick explanation of step by step how you go about it without chasing anybody.
I think what's genius and what I got most about this, first and foremost, is the fact that you can get your what do they call it back in the States? IRA? We call it
Yeah, a
RSP.
self-directed IRA here is what it's
Yeah,
called in
so
the
your
States.
self-directed IRA, never thought about that process where people can use their RSPs over here in Canada to self-direct them and give it to you as private lending so that you can then go reinvest it into real estate. Most people take those RSPs, and if they were to self-direct them, they were going to direct them into the stock market, companies like Tesla, Amazon, and so forth, right? So a lot of banks, for us over here, Bank of America, for you, for us, it's TD Bank, or RBC Bank. And so it does allow people the opportunity to start self-directing those RSP funds and probably get a safer, better rate of return. The question I
Well,
ask,
and that's the thing of it,
yeah,
when you're using your retirement funds or in liquid investment capital, because I've got private
of
lenders
course,
doing both, just liquid investment capital and or retirement funds. But when you invest in the stock market, you got the volatility, right, of the values. Well,
yes.
what our private lenders absolutely love is it's just like putting your money in the bank in a certificate of deposit. You know exactly what your rate of return is going to be, and you don't have to worry about the value of your investment going down. In fact, the principal loan amount remains the same while we're borrowing the money because we either accrue the interest or we make interest only payments. So that way, that's a win for the private lender because it keeps all of their money invested while it's invested in that property. And by the way, Nick, one thing you said a few minutes ago, I'm really glad you brought up, and that is you do a lot of wholesaling.
Yes.
And so the beautiful thing about private money, of course, you don't need private money to wholesale a deal, right? You're going to collect an assignment fee.
Yeah.
But let me tell you what private money does do for the wholesaler. What private money does for the wholesaler is you, as a wholesaler, you get to pick and choose which deals you want to stay in. Like if you've got an opportunity to make, $80,000 or $100,000 on one deal, well, you don't have to settle for an assignment fee. You can stay in the deal, take it down yourself with private money, and make the big profit on those deals that you want to.
And sometimes that happens quite often, right? So with the group I'm involved in, where we're partner up on that aspect on it. So my main component is buying and selling real estate for clients. But then there's another business that I'm partnered up with I'm involved with, where we look at assigning the deal, buying them at a wholesale, either assigning them or we pick up the deal ourselves, right? So, but the biggest aspect for us is what stops us from picking up some of these deals is finding and raising capital, and
Right.
that's the biggest and hardest part of it all. Um,
Well,
so
and
so
and therefore that's why I practice and preach and teach. The money comes first. The
yes,
worst time to be looking for money to fund a deal is when you got a deal under contract and you got a deadline to close.
correct.
So when you got the private money lined up first, think about, how that just takes all the stress off, right? The only stress you got now is you need to find a deal before that private money goes away.
Yeah. So what type of returns are you offering your private lenders, and
Yeah.
and how does it work? What's the exit plan on that?
Right. And you know what? This is one of my favorite reasons for private money.
Yeah.
We set the rules. The interest rate is not a negotiable topic unless you're talking to an existing private lender. If you're talking to an existing private lender, they already know what private lending is. But when you're teaching somebody in your own network what it is, this is all a new game to them. So we set the rules. And what's one of the rules? You know what's interesting, Nick? I've been paying all my private lenders. We've got 47 private lenders right now
Wow.
that we're paying, right? And by the way, if you're listening to this show, you don't need 47 private lenders. You need one or two to get you started. Well, ever
Hmm.
since 2009, Nick, I've been paying the same interest rate ever since 2009. And here it is, 8% with no points.
With no points.
8%. No points, no origination fees. Here's the deal. It never comes up in conversation, so why should I bring it up? You see, I mean, not one of these
It's a good
47
point.
not one of these 47 private lenders had ever heard of private money.
Yeah.
They'd never heard of private lending. And I come along and offer 8%. Before COVID, in the United States, the average 12-month certificate of deposit return got down to 1/4% prior to COVID. And I'm paying 8%. I do pay 10% if it's in second position for a junior lien. I'll use smaller amounts of money in second position, say for rehabbing, and I'll use the larger amounts of money from private lenders for purchases. And I pay 8% on that. Well, here today in the United States, you can get a 12-month CD right now for 5%. 5%. But guess what? My private lender's like 8%, better than 5%. And nobody's got a crystal ball. But if I did have a crystal ball, I think we're going to see mortgage rates here in the United States back down in the fours before the end of this year.
Wow.
But time will tell. Time
Time
will
will
tell.
tell for sure.
Yeah.
Yeah.
So, we make the rules. We make the rules. This is the interest rate I'm paying. And so
It,
it's
you
a
know,
beautiful thing.
Jay, it's creative. It's creative, especially today over here in Canada. Rates right now we're running around 7%. So we've eliminated a few sectors within our market. First time home buyers, very difficult for them to get into the marketplace because they can't get approved today at those rates.
Right.
Investors or speculators have kind of removed themselves out of the market because even the long-term sit and hold investor who wants to generate that rental income is not in the market right now because their negative cash flow on their properties. Fix and flippers are very worrisome right now within the market because they're worried that if rates do start to continue to climb, that values will, of course, decrease. So right now, our buyer market or seller market is any who's an end user, somebody who's looking to upgrade or downgrade. But I do believe right now, if people can start getting creative and finding ways to raise some capital and invest within the markets itself, the opportunities are going to be there to be grabbed. And when this market starts to surge, there's going to be opportunities for people to start making a lot of money, especially on these fix and flip properties, as we call them, or to refurbish these properties. And I think you're onto something. And I really, really want to start focusing my perspective on helping people and educating people that if they did want to start investing some RSPs, and I got to look at the contractual arrangements behind that and how it actually works. I have a reputation that I feel my brand is a trusted brand and something that people could relate with, and knowing that if I really wanted to go and raise some capital to help or use their capital to buy real estate to continue flipping these properties, I think I have the capabilities of doing it because of my brand that's associated within this community, that people wouldn't have any issues to wanting to invest with me. So I really like where we're going with this, and I think you're really onto something. It must be a good feeling for you that when you're able to start paying off your private lenders, and raising that capital and giving them those returns that you guarantee them. What's it feel like for you?
Well, what it feels like is it feels like that you're in control. And it also feels like you're making a big difference in other people's lives. We've received thank you notes over the years from our private lenders, thanking us for changing their retirement years. and being able to travel and do things that they ordinarily wouldn't have been able to do. And I mean, that just feels wonderful that you're making an impact, you're making a difference. Not only, I mean, think about it as a real estate entrepreneur, a real estate investor. Think of all the lives and people's lives that you are impacting. How about who you're buying from the seller? So many of our sellers are in distress and we're helping them out of distress.
You are. Yes.
You know, when you're rehabbing, think of all the different trades of people that you're paying money to on rehabbing a house, a property. And then when we sell properties, you're fixing their problem, or you're selling on rent to own, you're fixing their problem. And then when you're paying private lenders, you're making a difference in their income. If they're using retirement funds, in their retirement money. So it just feels wonderful to have such a positive impact on so many people's lives. And of course, you're winning too. I sort of view us as like the orchestra director and pulling these people together to make the deal work.
Jay, that's great. That's some really great insight, and you are doing some really wonderful things, and helping out there and educating people on finding creative ways to go out there and raise some capital to get into the market is really is really genius, and I really want to get a copy of your book for sure, because I need to educate myself a little bit more on it, because I always go with more the conventional A lender over here, as we call it, or the big banks, instead of trying to raise the private capital. But sometimes they're going to restrict you and they want to know every single thing about you. And I think sometimes when you go to the private lender, it becomes a little easier. We don't have to find, you don't have to provide as much documentation or proof of income or where the money is coming from. What's the difference between the private money and hard money lenders? Can you
Yeah.
give us some insights between some benefits and maybe some drawbacks? Which do you prefer to work with and why?
Well, I definitely prefer to work with my private lenders because I'm making the rules, right?
Yeah.
I'm not applying for a mortgage, I'm offering one. Now, I've got some really, really good friends who are hard money lenders and brokers. And so I say establish as many relationships as you can, with hard money lenders, private lenders. But at the end of the day, the private lending is so much easier and quicker. Why? So here's the big difference. First of all, a hard money lender or broker typically is a brokerage, to where the hard money lender has gone out and raised private money from individuals to invest in their hard money lending fund.
Hmm.
And then the hard money lender turns around and loans that money out to us, the real estate investor, charges a higher rate of interest than what they're paying to the private lenders. And of course, they also charge origination fees or points, right, as part of their income. Well, here in this world of private money, we're not going through a middle person. There's no middle person involved with private lending. It's a direct one on one transaction between you and your private lender, the individual. You're not borrowing money from an LLC, you're borrowing money directly from them or their retirement account. So, number one, it's easy, it's quick. I make all my offers, I can close in 7 days. That's another big benefit. I can close a deal in 7 days. You can't close a deal in 7 days when you're borrowing from a traditional commercial lender. There's no appraisals. I never have to get an appraisal. I rely off of a comparative market analysis that my realtor has given me. Another big thing I love about private money is there's no limit to the amount of private money you can borrow, and there's no limit to the number of private lenders that you can do business with.
Hmm.
When I was borrowing from the commercial bank, there was a limit to the amount of money they would loan out to me at any given time. So that restriction is totally taken off as well. Here's another big one, Nick, and this is huge, huge. When you borrow from a commercial lender, you always have to have quote unquote skin in the game. You always typically have got to put a down payment down, right? 10%, 20%, or whatever. In this world of private lending, the way I do it, I never take any of my own money to the closing. In fact, I always pick up a check at closing because I'm always able to borrow more than I need to buy the house. And that's sort of a check and balance. If you can't bring home, if you're rehabbing a property And if you can't bring home a check from your real estate attorney or your closing agent when you buy that property, you shouldn't do the deal. Now, obviously, that's not going to work unless you're buying at a deeply discounted price.
Hmm.
I'm typically buying these houses at less than 50% of the after repaired value. Now, however, this still works to be a conservative investment for the lender. So, how does that work? I mean, people say to me all the time, they say, Jay, you can't borrow money without putting skin in the game. Well, here's the skin in the game. The skin in the game is the equity in that property that already exists that protects your private lender because of us buying at a discount. So we typically are not going to borrow more than 75% of the after repaired value. I didn't say 75% of the purchase price. I
Correct.
said 75% of the after repaired
So you're
value.
taking enough money to do the renovations,
Exactly.
basically. Yes.
So if I've got a rehab involved, I'm typically going to bring home a $30,000 to $50,000 check when I buy. And in this world of private money, I don't have to take a down payment. So closing quickly, no credit score to worry about, no verification of income, no appraisals. I mean, the closing documents, when I buy a property using private money, there's 4 pieces of paper, 4 documents: promissory note, deed of trust, the HUD settlement statement, and any disclosures. And that's it. It's simple, simple, simple.
And the lawyer, I guess your lawyer does everything for you on the closing transaction
Absolutely.
when everything
Yeah.
has to get done.
I'm glad you brought that up.
Yeah.
All closings are taking place by and handled by the real estate attorney. And they draw up the paperwork and they do the closing. Now, here's another important point to protect the private lender.
Hmm.
We never accept money directly to us, the borrower, from the private lender. They wire their funds directly to our lawyer's escrow account. And then when the closing takes place after that is when funds are dispersed. We also protect our private lenders by naming them on the insurance policy as the mortgagee, just like a bank is named on
Hmm.
the insurance policy.
Hmm.
So we protect them that way. We also add our private lenders on the title policy as an additional insured in case there's any title issues. Well, you see, these private lenders from your warm market, they've never done this before. So you have got to be ethically responsible and protect your private lenders. How do you protect them? Get my book that I'm going to offer up here in a second, and make sure you follow my rules.
Yes, Jay, I'd love to get a copy of your book too as well. And maybe we can get one of our lucky listeners to get a copy of your book as well. How do you want to get this done?
Absolutely. So here's what the book looks like if you happen to be watching and not only listening. But the book is titled Where to Get the Money Now. Where to Get the Money Now. Subtitle is How and Where to Get Money for Your Real Estate Deals Without Relying on Traditional or Hard Money Lenders. This is not an ebook. You can't download it. We actually send it first class mail. And here's how you get the book. You go to www.jayconner. By the way, I'm an ER, not an OR. So www.jayconner.com/book. BOOK. That's jayconner.com/book. And now you can get it off of Amazon for $20, but we'll send it to you free. Just cover shipping and handling. In addition to that, you can also follow me on my podcast. The name of my podcast is called Raising Private Money with Jay Conner. Raising
Yeah,
Private Money
I
with
got to
Jay
download
Conner.
that. You're on Spotify and Apple Podcast.
All that stuff.
Yeah.
Spotify, Apple Podcasts, you have the iTunes, etc. And then I do a live event 3 times a year in person. It's called the Private Money Academy Conference. It's right here in Eastern North Carolina. So, Nick, I'm going to give your listeners a $3,000 gift right now. These are $3,000 tickets, but I'm going to tell your listeners how they can come for only a $97 registration fee for 2 people. You can check it out at www.jaysliveevent.com, all spelled out, JaysLiveEvent.com, jaysliveevent.com. I'd love to meet you in person.
That is awesome. Jay, thank you so much for coming on the show. I know you're a busy guy. I know you're rehabbing a lot of properties out there. Would love to have you back on the show at some point in time if I could get that opportunity to get you back on. But I'm sure that maybe you've changed even one person's life right now and just made them think outside the box on how to get creative and start investing into real estate and at least finding ways to get into the market because opportunities are there. You just got to know how to grasp those opportunities. And that's what this show is about, revealing real estate, is getting in depth of majority of times of things that you won't even know about. And this is one of those shows that I think have created some really wonderful insights for our viewers and listeners. And it's been a pleasure to work with you here.
Nick, thank you so much for having me on.
You're welcome, Jay. All the best of luck, and we'll see you in the future.
You got it.
Looking to buy or sell? Call a team you can trust. Don't believe me? Our Google reviews say it all. Put us on your lawn, your house will be gone. TheOPteam.com.